Meanwhile, another major gain in the stock market on Friday amid expectations that the Federal Reserve will finally cut interest rates next month, as President Trump has been urging for the past several months. This market is up 10% on the S&P 500 during Donald Trump's term from the beginning of the year, second time around. I caught up with the president of the European Central Bank, Christina Lagarde, at the Central Bank Symposium in Jackson Hole, Wyoming this weekend. And I asked her why she's been cutting rates at least 8 times by 200 basis points in the last 16 months, even as Jay Powell has declined to do so. Lagarde walked me through her reasoning for cutting rates while also assessing the global economy, including stiff regulation in Europe and why it can't seem to create the trillion-dollar companies that America has created, and a lot more. But I began with the war on Russia and Ukraine and what Europe can do to stop Vladimir Putin. I want to get your take on the impact on Europe because the European Union and Western governments are overseeing this $300 billion in Russian assets sitting in Europe right now. Now, I know that the EU has said that the interest on that money and the profits from that money can be used to rebuild Ukraine. But what can you do as the president of the ECB in terms of stopping Putin from attacking Ukraine? Can you demand that $300 billion in Russian money does not get back to Putin and you use that to rebuild Ukraine?
The Europeans, as you know, are financing a lot of the support to Ukraine, as do the Americans. And I think it's our joint duty to defend the values of democracy, of freedom, and of independence. There is Russian money, exactly central bank Russian money, that is currently being frozen in the accounts of a European institution. And I think so far what we've done is make sure that that money stays frozen and is not disposed of by Russia. What we have considered as perfectly legitimate is that the proceeds of that money, the interest, if you will, generated by the principal that is sitting there, is used in order to reimburse the loans granted by the EU and the US. And that is not infringing of the principle of sovereignty over assets. Now, my hope, my strong hope, is that as much of that money as possible is used in the negotiations, and that all of it is used to reconstruct Ukraine and to make sure that the damage that have been inflicted on that country be repaired. But this is not my decision. Right. I'm just the president of the central bank.
Well, you are among the most influential voices in Europe, if not the most economically influential voice in Europe. So shouldn't you be able to say this money will not get back to Russia? I mean, isn't there more that you can do in your role? I mean, you know all about sanctions and the impact from the IMF days. What about sanctions? Would sanctions on Russia work? Or what else can you do to ensure that that $300 billion does not get back in Putin's hands?
Maria, you're right to establish a link between the sanctions and the freezing of that of those funds. And the sanctions have to be imposed and have to be constantly renewed and reinforced if necessary in order to force people to the negotiation table and to extract a peace agreement. But all I can do is give my views to the leaders of Europe in order for them to make the decisions. And I do that.
In the same vein, Europe has been a major victim of this Russian aggression, right? And yet you're not exactly embargoing Russia, right? I mean, Europeans are still buying Russian oil. What can you do about that?
It has, first of all, Europe has suffered as a result, but the country that has suffered the most is, of course, Ukraine. We have been, in a way, collateral damage of what has been major damage in Ukraine. The massive increase in energy prices, the significant material reduction of gas purchases from Ukraine, all of that has inflicted significant damage and cost to Europe. And we had to face alternative sources. We had to buy a lot more from the United States, from Norway, from colleagues and friends around the world in order to substitute the gas that we were no longer buying from Russia. And this is a continuing process. And the European Commission has asked those countries that are still purchasing because of physical constraints to stop doing that in short order.
Do you think they will stop? I mean,
I very
isn't
much hope that they do.
Inadvertently funding the war on Ukraine?
First of all, it's minimal because the amount has been massively reduced, and I think that it's on the way to complete extinction.
Do you feel that the independence of the Fed has been, impacted by these last few months?
I think the independence of any central bank is critically important. I think we have to be accountable. We have to report back and to answer all the questions of either Congress in the US or the European Parliament for me. But it's vitally important that central bank is independent. You know, in my IMF days, I have seen close hand what happens when a central bank stops being independent or when its independence is under threat. It becomes dysfunctional. It starts doing things that it shouldn't do, and the next step is disruption. It is instability, if not worse. So I think that it should not be debated.
I understand that, and I'm with you on that. But I wonder if the critics are onto something when they say maybe the Federal Reserve already violated its independence by, as soon as Jay Powell got into office, he came up with all of these climate rules and
no.
DEI rules. Oh, they did.
No.
They did. They said they wanted to have a mandate, but then he also put climate rules and regulations in place and DEI regulations, and then cutting interest rates 2 months before an election, and then after an election when Donald Trump won, saying, oh, never mind, I'm not going to continue cutting, I'm focused on inflation now.
You know, on climate change, I disagree with you. I really disagree with you because as part of our mission, the ECB must do supervision of the banks, right? It's a separate umbrella, but it's part of the ECB. And in the supervision of banks, it is our duty to check the climate change risk to which banks are exposed. You know, if I have a mortgage on a house which is located by the ocean line, and there is a risk of flood, or there is a risk of that house never being insured again, it has to be taken into account in the balance sheet of the banks. So that is risk management at its basics, and we are doing that at the ECB. I think the Fed has been very, very much on the fence in relation to climate change, and I wouldn't say that the Fed has been actively participating in any of our debates on climate change, including from a risk management perspective.
Hey, it's Will Kane. Click here to subscribe to the Fox News channel on YouTube. It's the best way to get our latest interviews and highlights. And click to subscribe to the Will Kane podcast for full episodes right now.